Hello students, welcome back. This is Dr. Mercado. Hope all of you are doing well and having an awesome week so far. So this will be the final presentation for Chapter 17 dealing with process cost systems. If anything comes up, then I'll have another video. But so far will be the final problem I'll be covering. Now this is a problem, which means it's longer. Okay, so we have the basic exercises, then we have the exercises, and then we have the problem. So the problem is more complicated in nature per se. So that's why I decided to cover this specific problem, as well as it covers a lot of information dealing with different journal entries that have to be recorded. Okay, so the problem that we are going to be covering is problem 17-1. Let me go ahead and move that over to the problem. So in this particular problem, we are going to be journalizing a lot of entries, and then we're going to be doing some calculations to calculate. In this particular case, they're asking us to compute the ending inventory account balance and the factory overhead account balance. So there's a lot of entries that needed to occur before we can do our calculations. Now, like I said before, in accounting, you make an error on your journal entries, then the rest of your calculations are going to be off. So just be super careful on your journal entries. So the journal entries that we're going to be practicing today will allow us to record the cost flows and transactions for a process cost system. And some of these entries include the purchase of materials, the usage of materials and direct labor, the incurrence of overhead, and the application of overhead. Now, there's a difference between incurring and applying overhead. Okay, incurring overhead is something actually happens, and you accumulate your overhead in the overhead account, and then at the end of a period, you apply the overhead to the specific working process. And then, of course, we transfer the cost from the department to the finished goods. And then, of course, when the goods are sold, the costs are transferred from finished goods to cost of goods sold. So it's a process. And this particular problem is going to allow us to go through that process of journalizing the different transactions as well as doing some calculations. Okay, so let's get started. Okay, so this is entries for a process cost system. So it says Port Ornament Carpet Company manufactures carpets. Fiber is placed in process in the spinning department where it is spun into yarn. And then the output of the spinning department is transferred to the tufting department where the carpet backing is added at the beginning of the process, and then the process is completed. Okay, so we're making carpets. First, we spin the fiber into yarn. And then once we have the output, we get whatever was spun and we attach the back, and that's done in the tufting department, and then we're done. Voila. Okay. On January the 1st, Port Ornament Carpet Company had the following inventories. So we have two working processes. The first working process is the spinning department. So we get our fiber and we put it into work into the spinning department. Once the spinning department is done with their process, we transfer it from the spinning department to the tufting department. Once the tufting department is done, then it's ready to be sold. Okay, so here we have the inventory balances. We have finished goods of 62,000, working process for the spinning department 35,000, working process for the tufting department 28,500. We have materials of $17,000. Departmental accounts are maintained for factory overhead. So we are keeping factory overhead at each department level. Okay, and both have zero balances on January the 1st. So we don't have a beginning balance for factory overhead. Okay, it says manufacturing operations for January are summarized as follows, and then we are giving transactions A through I, and we'll go through that in a bit. Okay, instructions. We have to journalize the entries to record the operations, identifying each entry by letter. Once we're done with all of the journal entries, we have to compute the January 31st balance of the inventory accounts. And then last but not least, we have to compute the January 31st balances of the factory overhead accounts. So let's get ready to work this problem because it is fairly long but not difficult. And your textbook does an awesome job in providing you with an example of how to do these journal entries. Okay, so it's just a matter of locating it. And of course, if you do this day in and day out, it'll become second nature to you. You'll memorize it and you'll have it you'll have it by heart, okay? So it's just a matter of becoming familiar. Practice makes perfect. The more you practice, the more that you will remember and the more prepared you'll be, okay? So let's start with letter A. It says materials purchased on account, $500,000. So in accounting, my kids say I talk a lot to myself. I do, because in accounting, you have to ask yourself all of these questions. What is going on? So what did we do here? Well, I purchased material, okay? So what did you buy? I bought materials, okay? You have more materials. The question is, how did you pay for these materials? It says on account. So when you buy something on account, you credit accounts payable, okay? This we should know from our Accounting 2401 class, okay? The basics of accounting. So what did we buy? We bought materials of $500,000. How do we pay for them? With accounts payable. Accounts payable is a liability account. My normal balance is a credit, okay? $500,000, okay? And for purposes of this exercise, we are not going to be doing journal descriptions. We're just going to be doing the journal entries, okay? Just to save space. Letter B. Materials requisitioned for use. What does requisition mean? It means that you're requesting these materials from your warehouse. So you have all of these materials stored in your warehouse. Right now you have a materials inventory. Once you requisition them, you remove them from the materials inventory and you put them towards your working process, okay? Because now you've gotten the materials and you're actually begun using them for a purpose or a process, okay? So it says, materials requisition for use. Fiber, spinning department. So you requested fiber for the spinning department, $275,000. So where is that fiber going into? That is going into your working process for the spinning department. Okay, and the amount is $275,000. So we got the material from the warehouse, and now we put it into our working process because now we've started using or manufacturing the carpet, and it's in stage number 1, which is the spinning department. We are also requisitioning carpet backing for the tufting department. So that's going to go into my working process for the second department, which is the tufting department. Okay, and that is $110,000. Now here we have to be very careful, okay? It says indirect materials, spinning department. So these are materials that are not associated so much with the actual production of the carpet. They're indirect materials that we might need because they're indirect materials. Anytime you see indirect materials or indirect labor, that goes into factory overhead, okay? Factory overhead. So I'm going to have my factory overhead. So anytime you have anything that's indirect materials, indirect labor, that goes into your factory overhead. And then this is for the spinning department. Okay? And we have $46,000. Okay? And then we have indirect materials for the factory, for the tufting department. So we're going to go ahead and we're going to debit factory overhead for tufting, okay, of $39,500. Okay? So we requisitioned all of these materials. So we have a whole bunch of materials in our warehouse and we requisitioned them, which means we took them out of the warehouse. So what's going to happen to the amount of materials we have in the warehouse? Is it going to go up or is it going to go down? Well, because you took the materials out of the warehouse, they have disappeared from the warehouse, you have less materials. So what's going to happen? You are using the materials, so your material balance is going to decrease, okay? So materials is going to decrease by the total of everything that was requisitioned, both direct and indirect materials. So we're going to add those 4 numbers together, and that's going to give me $470,500, okay? So when you requisition materials, you debit. If it's direct materials, you debit the working process for the respective department. If it's indirect materials, you debit the factory overhead for the respective department, and then you credit materials to decrease the balance. That way you know you no longer have those materials available, okay? So that deals with materials. Every time you requisition materials, this is the entry you're going to do, okay? Now we're looking in letter C at our labor. Okay, it says direct labor spinning department. Okay, so now we have to allocate our labor to the spinning department. So we're going to go ahead and we're going to have work in process. Anytime that you invest into a particular department, we're going to put it in there. So we have work in process, and this is for the spinning department, and that is 185,000. Then we have direct labor for the tufting department of 98,000. So we're going to have work in process for tufting department, and that is $98,000. And then we have indirect labor for spinning departments. So I said if it's indirect labor or materials, it goes into factory overhead. And then this is for the spinning department, and we have 18,500. Then we have indirect labor for the tufting department, so we're going to put that factory overhead for the tufting department, and we have $9,000. Okay, so if it's direct labor, you put it into work in process. If it's indirect labor, you put it into factory overhead. Okay, so now this is the labor that was used. The problem doesn't mention anything that you're paying your employees at that point in time. So because we're not paying our employees, this is money that we owe our employees, that we're going to pay them maybe at the end of the month, whatever the case might be. So whenever we owe our employees, we use the account wages payable. Payable is a liability, which means we owe that money. So I'm going to add those four totals together, and that's going to give me the amount that I'm going to credit my wages payable account. Okay. Letter D, depreciation charged on fixed assets. So we have equipment that we use, it's being depreciated. We have equipment in the spinning department and in the tufting department, and both of it is being depreciated. Depreciation of equipment goes into factory overhead. Okay, so anytime you have depreciation, we're going to debit factory overhead. Just make sure that you debit the correct department. The first one's the spinning department for $12,500. The second one is the factory overhead for the tufting department of $8,500. So this is the amount of the depreciation. Now I'm going to credit accumulated depreciation. Okay, and then we're going to get a total, and then that gives me $21,000. Letter E, we have expired prepaid factory insurance. So our insurance on the factory. Okay, so anything that is not direct materials or direct labor goes into factory overhead. So anything else that is not direct materials or direct labor goes into overhead. Anything associated with the factory, this could be the taxes on the factory, the insurance on the factory, the depreciation on the equipment of the factory, anything of that nature is factory overhead. So letter E, we have our expired insurance. So we're going to have factory overhead for spinning of $2,000, and then we have factory overhead for tufting. We have $1,000. Okay, so that's going to be our debit. And then what's happening here? It says expired prepaid insurance. So what's happening to my prepaid insurance? It's decreasing. Prepaid insurance is an asset. We decrease it with a credit. Okay, so prepaid insurance is being decreased by the sum of both the spinning and tufting, and that gives me $3,000. Letter F, we applied factory overhead. So they've done some calculations for you, and they're saying, okay, you've accumulated all of these amounts into your factory overhead. Now we're going to actually apply it to the respective departments. Okay, so they're telling you to apply $80,000 to the spinning department and $55,000 to the tufting department. So we are actually applying the overhead to the respective departments. Okay, so when you actually apply it, we are going to debit work in process for spinning. Okay, and the amount is $80,000. Okay, and then we have work in process for the tufting department, and that is 55,000. Okay. Okay, so work in process is being debited. So now we have to reduce our overhead. So my factory overhead is being reduced for the spinning department of 80,000, and then factory overhead for the tufting department 55,000. Okay, so if you notice, when we accumulate factory overhead, we debit factory overhead account. When we apply factory overhead, we credit factory overhead. Okay. Letter G. Production costs transferred from the spinning department to the tufting department. So we've accumulated all of this cost, all of this working process in the spinning department. We are done with phase number 1. All of the spinning, whatever we were doing in the spinning department has been done. Now we're going to transfer our goods from spinning to tufting, $547,000. So where are we putting the money into? Where are we putting the expense into? Now we're transferring the cost from spinning to tufting. So tufting is going to obtain, sorry about that. Tufting is going, the balance for the working process in the tufting department is going to increase because we're transferring the balance from spinning to tufting. So the tufting department working process balance is going to increase by 547,000. My working process for the spinning department is going to decrease by 547. I'm sorry, put an extra number there, 547. Okay, so my working process balance is decreasing. Okay, so I'm transferring the balance in my working process out of spinning and into tufting. Okay. Letter H. Production costs transferred from tufting department to finished goods. Okay, so in letter H, we're done with the tufting department. The tufting department is now done with the carpet, and it's now ready to be moved to finished goods so we can sell it. Okay, so what's going to happen? Well, now my finished goods is going to have the actual cost. Finished goods is going to have the actual cost of both the tufting and the spinning. Okay, whatever I spend in spinning and tufting, now I'm going to transfer that to my finished goods, and we spend $807,200. Okay, well, what's going to happen to your balance in your working process tufting? It's going to be zeroed out. Why? Because we've moved it out of tufting and into the finished goods. Okay, 807,200. Okay, so now we've transferred the cost from the tufting, okay, into the finished goods. So whatever is getting the balance is getting debited. Okay, whatever is getting rid of the cost, it's getting credited. So we are releasing the tufting department from all of the costs, and we transfer it over to finished goods. Okay. Letter I. The cost of goods sold during the period. Okay, the cost of goods sold is $795,200. So whenever we have the cost of goods sold, we're going to go ahead and we're going to debit cost of goods sold. This is what we actually sold during the period. So we had $807,200 available to sell. We sold $795,200 of that. Okay, so we sold most of our goods. Okay, $795,200. Okay, so we sold that. And what's happening to our finished goods? We're going to decrease the balance because we no longer have those goods available. Okay, so our finished goods balance is decreasing. Okay, so we no longer, we had $807,200. We sold $795,200. So that means, okay, so let's see what we had. If we only had this, we had $807,200, and then we sold $795,200. So that means we would have about $12,000 left available to be sold in our finished goods account. Okay, so those are the journal entries that we have to do for requisitioning materials, for the labor, for the depreciation, for the expired factory insurance, for the application of the overhead, and then transferring the cost from the spinning to the tufting, from the tufting to the finished goods, and then finally selling our goods. Okay, the whole kaboom is right here. Okay, now I like, because I am using Excel, I always like to make sure that my debits equal my credits. That's just something I have, a habit I have. If they're out of balance, then there's an error somewhere. We need to figure it out. Debits must always equal credits. Okay, and it's very easy to transpose a number or forget to enter a number. So just make it a habit when you're done with your journal entries, add your debit column, add your credit column, and make sure that they equal. Okay, that is requirement 1. Requirement 2 asks us to compute the January 31st balance of the inventory accounts. Okay, now I've set up this little table. We've got our materials, our work in process spinning department, our work in process tufting, and then our finished goods. These are the different accounts being affected. Okay, so we're going to start off with our balance as of January the 1st. Okay, so did we have a beginning balance for materials? Yes, we did. We had $17,000. Okay. Did we have a beginning balance for work in process spinning? Yes, we had $35,000. Okay, so we're going to put that over here. Work in process tufting, we had $28,500. So these numbers are going to be going down over here. Okay, down there. Okay, so we're just transferring the beginning balances down to the bottom. Okay, nothing, no major calculations. We're just transferring that to the bottom. Okay, and then we have the tufting. What did we say it was? 28,500. And then finished goods, we had 62,000. Okay, so we've got those beginning balances. Now we're going to have all of our debits. Okay, so let's look at all of our transactions. Let's look at all of our transactions and find all of the debits for their respective accounts. So let's first concentrate on materials. Okay, so we're going to look for anything that has materials. Okay, and only if it's a debit. Okay, so materials, I've got right here, materials has a 500,000 debit right there. Okay, so I've got a debit there, and that's about the only one I have because I've got a credit down here. So I only have one debit for materials. So I'm going to go ahead and I'm going to do my materials. I'm going to add 500,000. Okay, then I'm going to have my credits. Okay, and I'm going to look for materials again, but now I'm looking at the credit component, and it's 470,500. Okay, because it is a credit, I'm going to put it in parentheses because it's a deduction. Okay, and then that's going to give me my balance as of January the 31st. Let me capitalize this. Okay, so now I'm going to add everything in this column for materials, and let's see what that gives us. Okay, so you add your 17,000 plus your 500 minus your 470,500. And that gives me an ending balance for materials of 46,500. We're going to do the same thing for work in process spinning, work in process tufting, and finished goods. So now we go to work in process spinning department. Okay, and we're going to look for all of the debits. Work in process spinning, and that's a debit, so that's 1. Work in process spinning, that's a debit, that's 2. And then work in process spinning, that's a debit, that's 3. And that is it. So we have 3 transactions, one for 275, one for 185, and then one for 80. So that gives me $540,000 in debits. Okay. Now I'm going to look for my credits. Work in process spinning credits. So now I have work in process spinning, work in process spinning. I've got one credit of 547,000. One credit right there. Okay, so because it is a credit, I'm going to put it in parentheses. So all we're doing is we're going back to our journal entry and we're locating either the debits or the credits, getting a total and entering it in the cell. Okay, that gives me a balance of 28,000. Now we're looking for work in process tufting. and we're looking for the debits first. So working process tufting, let me put another color. Working process tufting, that's a debit. Working process tufting, right there. And then working process tufting right there, okay? So we're going to add all of those debits. Let me get my calculator. So I've got 110,000 plus 98,000 plus 55,000 plus 547,000. That gives me $810,000 in debits, okay? Now we're going to look for working process tufting but credits, okay? So working process tufting credit. Now I've got one right there, and that's 807,200, okay? That's going to be in parentheses. And then we're going to add our total for the column for working process tufting, okay? And then last but not least, we've got our finished goods. So we're going to go and we're going to look for finished goods debits, okay? Finished goods debit right here. I've got one debit of finished goods for 807,200. So I've got one debit. And then we're going to look at for the credits. And we have one credit of 795,200. Okay? And now we can get our balance. So we're getting our beginning balance. We're adding our debits. We're subtracting our credits to get our ending balance. And my balance for finished goods is $74,000. Okay? So requirement 2, compute the ending balances for the different inventory accounts. Here you go. We've got materials, working process spinning, working process tufting, and our finished goods ending balances for each. Okay? So this lets you know what? We only have 46,500 of materials available. Maybe we need to order some more. Or this is what we have in our working process spinning, 28,000 that's still sitting there that needs to be completed. We've got 31,300 sitting in our tufting department that needs to be completed. And we've got finished goods that we can actually sell to our customers of $74,000. Okay? That is requirement number 2. Requirement number 3 is to compute the January 31st balances of the factory overhead accounts. Okay? So we're going to do the same thing, but now I'm just going to copy and paste this down. But now it's for the factory overhead spinning and the factory overhead tufting. So we're going to do the same thing. Now for these, the problem stated that the departmental accounts both have a 0 balance on January the 1st. So these, the factory overhead had a 0 balance for the beginning balance. Okay. Now we're going to go and we're going to locate my factory overhead for the spinning department, and we're looking at the debits. Okay. Factory overhead spinning, and we're looking at the debits. Okay. So I've got 1, I've got 2, I've got 3, I've got 4, and those are the only debits. So we've got 4 debits. Those are my greens right now. I'm going to add, so I'm going to have 46,000 plus 18,500 plus 12,500 plus 2,000. That is 79,000 in debits. Okay. Okay. Now credits. We're going to look for factory overhead spinning department credits. Okay. Factory overhead spinning department credit, we have 1 for $80,000 right there. So because it is a credit, I'm going to put it in parentheses. And then I'm going to add my total in my column for factory overhead spinning. And that's going to give me a negative 1,000. This is a credit. Okay, a credit balance. Now we're going to do the same thing for the tufting department. Okay, so for the tufting department, let's look at the debits. Factory overhead tufting debits. And let's do, let me pick another color. Maybe in purple. There we go. Factory overhead tufting Debit, factory overhead testing debit, factory overhead testing debit, and then we've got another one, factory overhead testing debit. Okay, so we've got 4 debits, which are your purples right now. So we've got 39,500 plus 9,000 plus 8,500 plus 1,000. So we're looking at the purple numbers. That gives me 58,000 in debits. Okay, so I've got 58,000. And now let's look for the work in process. For the factory overhead testing credits. So we've got factory overhead testing, and we've got a credit of $55,000 right there. Okay, so we've got a credit of 55,000. So now we add our column for factory overhead testing, and that gives us a debit balance. Okay, so the third requirement said to compute the ending balance for factory overhead accounts, and these are the ending balances: a credit balance for the factory overhead spinning, a debit balance for the factory overhead testing. So some adjustments will need to be made to allocate these costs accordingly. Okay, but that's not being requested for in the problem. Okay, so these are all of the journal entries associated with the process cost system. And then we have the calculation of the ending balances for materials, for the different inventory accounts, and then for the factory overhead accounts as well. Okay, so it is a long problem. It is a lot of information. Make sure that you read, make sure that you review those examples provided in your book. If you have any questions whatsoever, please make sure to contact me. I don't want you to fall behind because you're being shy and you don't want to ask. I just do ask that if you have a question, you send me the problem that you're having the question with, your attempted solution, so I can see what you're doing and provide guidance. Okay, I can see what you're doing right, what you're doing wrong, and I can direct you to where you need to look to solve the problem. I'm not just going to give you the answers. Okay, so that's just for reference. Send me that information. I'll look it over, and I'll get back with you. Okay, so that is basically it for this lecture. I hope you all have a wonderful rest of your week, and until next time, thank you.